From Fabrik Invest. I hope you're keeping well. I just wanted to update you quickly on my thoughts on the recent budget announcements by the Chancellor, Rishi Sunak. What are my thoughts on the budget? So just to sort of start off, let's talk about economic growth. It was revised originally from 4% growth to 6.5%. Which is good news. It means there's money back in the market post-COVID. The economy seems to be doing a lot better. So they expect 6.5% growth with wages going up. But on the other front, there's also inflation. So how expensive are things such as groceries and fuel and building materials, for example. So things are getting expensive. Historically, inflation's been at around 2 to 3% per annum. This year's been around 4% this year, possibly more, I reckon. So prices are going up. I mean, this has had a fairly negative impact on the construction sector and building sector because things like timber, wood and concrete, everything is becoming a lot more expensive, as well as shortages of HGV vehicles. So that's something the government certainly needs to look at. On the flip side, minimum wages, that's gone up to £9.50 minimum wage, which is good news for people on the lower sort of scale of earnings. It means they'll have a little bit more disposable income, which is certainly going to help when inflation's going up at the rate it is. On the rates, 3% decrease in duty rates for things like beer, sparkling wine, which is obviously good news. If you enjoy having a pint, it'll be a little bit cheaper, so that every little helps. On the investment allowance, capital allowances for buying things like machinery is currently at 1 million allowance, but this is due to be extended until the end of this year. I think actually extended to March 2023. So that's really good news. It's great for people that work in sort of that sort of sector, serviced accommodation, commercial property, for example. That would be really, really good news. Tax rates on income, just so you know, from the 1st of April 2023, rates will be going up, I believe 30% and 35%, which is not great news, but at least it's in April 2023. Rates will return, though, to 20% and 25% on the 1st of April 2024. So that's obviously the government just clawing back a little bit with all the extra expenses due to COVID. But that will only happen in April 2023 and it will run to April 2024, so not too bad. Now, the big question is, how's this going to affect the property market? If you look at the new homes market during the budget, it was announced funding of 1.8 billion into new homes and buildings, redevelopment of brownfield land, removal of dangerous cladding. There's also 11.5 billion investments into new homes, affordable housing programs. So the government's aiming to build 182,000 new homes. This is still not enough. There still needs to be more done to meet up with the demand outstripping supply. However, this is good news. There's also been a 50% business rate deduction for retail, hospitality, and the leisure sector. So that's really good news for serviced accommodation sector, hotels, areas where you can run your property as a business effectively via a limited company. That's something we're certainly happy to help with as well. So that's something that could really be good for people in that space, retail, hospitality, hotels, with having that 50% business rate deduction. So good news for the housing markets. It will certainly help. It's still not enough to meet demand required for new homes. There simply isn't enough brownfield land really and houses being built. It was mentioned new homes need to be built also to a new green standard to help reduce carbon emissions. That's great news, something we very much support. Previously, there was what's called a premium cost across environmentally friendly products. So construction products were expensive if they were eco-friendly. So they're now trying to make it a lot more affordable, incentivize new build home owners, which is going to help, especially with inflation on the rise. Furthermore, there's been a 7 billion pledge for transport projects in Manchester, West Midlands, South Yorkshire. This should help with accessibility, also further enhance the level of investment into new homes into these areas such as Manchester, where we've seen a real sort of property boom over the last few years. Another important thing that was discussed, cladding removal. A lot of people who bought properties which had the wrong cladding, after Grenfell Towers, there's been government saying that they have to replace it to safe cladding. So they've announced 5 billion to remove dangerous cladding from high-rise buildings. It's good news for landlords and leaseholders who were basically unable to sell their properties due to cladding issues on older buildings. Many of them were asked to stump up the funds to replace cladding instead of developers or the contractors who should have been held accountable. So this is good news. However, there was a mention of buildings below 18 meters where there's still thousands of leaseholders who may be affected by cladding issues. So a real issue for many older properties. That should be at the forefront of government initiative really to help with that issue. So on to planning. Planning has always been a bit of an issue for developers due to the processes being quite outdated. The Chancellor's promised 65 million to ramp up England's planning system and to make local planning easier for developers. This includes digitalization and technology to make the processes easier. Things can be done online and there's not so much bureaucracy and red tape, because that's part of the problem with a lot of developments sitting in the pipeline and just taking ages to come to the market. So welcome news for developers who've been stuck in planning. Hopefully that should help avoid these long delays and backlogs and issues for new houses. On to stamp duty. There's not been any extension to the stamp duty holiday. The results of the stamp duty holiday really created a bit of a stampede of buyers. House prices in some parts of the country have gone up between 10 to 20%. And this has obviously also had an impact on the house prices, but no movements on that front. We've seen a significant return at Fabrik Invest, especially demand from international buyers, I think because people can travel again, and the UK market is still considered fairly good safe haven for property investors. So there hasn't been any additional taxes for overseas buyers, which is great news because this can really deter offshore investment or overseas investment. It is, however, disappointing not to see further long-term measures or tax reductions, as this is really one of the biggest barriers when buying property in the UK, is all the tax legislation. So no news is good news, I suppose, but yeah, not enough in my opinion. What does this mean for property investors or people in that space? Investors, I think it's business as usual. It's actually really good news in most cases. There's nothing been any dramatic changes. The economy's picking up. House prices are still seem to be going up, but the Bank of England base rate at some point will probably go up. So people who have savings in the bank, your money's not doing anything for you right now. Plus, with inflation and quantitative easing, the bank's printing more money, means that your money's really devaluing in currency. So property investment certainly seems to be at the forefront of a lot of people's mind. So yeah, no real sort of negative news on that front. It's nothing really stand out, but there has been some initiatives that will definitely be beneficial. There's no surprises in the announcements. I still don't think there's enough being done for people, lower incomes or trying to get onto the property ladder because of affordability issues. The inflation is a concern because it's already impacting supply chains, shortages of heavy goods vehicles. This is having a negative impact on supply chains, and this means build costs are going up. So it's becoming a very challenging environment for new build homeowners, and this is something the government definitely needs to consider. Helping developers with these the rise of the build costs. Construction costs have gone up. New homes, some of them becoming undeliverable. There's not enough being done, but what this means is there's more of a shortage of property coming to the market, so prices are fairly stable, along with wages rising. That's great news. That will help with people with inflation on costs of rent and house prices. So overall, good news for investors. The capital inheritance tax is staying the same, so there's not been any real bad news for buy-to-let investors. We still believe it's a great time to invest. And that sums it up pretty much. So please don't forget to subscribe to our YouTube channel. Click the button below, also the bell icon, so that you can be notified when we go live. And we'll be more than happy to keep you updated on the latest market news. If you have any questions, give us a call. We'll be more than happy to help. Many thanks.